Hello traders, welcome back to the Forex Gig. In today's video, we are going to be talking about a trading strategy that combines the Parabolic SAR and the MACD indicator to identify high probability trade setups. These two technical tools work together to pinpoint precise market entries and exits across any time frame. The strategy is particularly effective in trending markets where the Parabolic SAR helps track price momentum, while the MACD confirms the trend strength. Stay tuned as we break down this systematic approach to finding profitable trading opportunities in the Forex market. We start by understanding this setup. The power of this strategy lies in how these two indicators complement each other. Let's break down each component to understand how they work together to generalize the reliable trading strategy or generalize the reliable trading signal. Now let's look at the Parabolic SAR fundamentals. These fundamentals appear as a series of dots. The parabolic SAR refers or appears as a series of dots above and below price, as you can see from the chart. When the dots are below the price, we are looking for potential uptrend. Once these dots you are seeing are below price, you are looking for potential uptrend. Conversely, if the dots are above price, once they are above price, you are looking for sell opportunities because it is a possible downtrend. The default setting is usually step 0.02 and maximum value of 0.2 rather. This is the parabolic indicator. While the MACD structure, the MACD consists of two moving averages with a standard setting of 12, 26 and 9 for smoothing signal. This period have proven to be reliable across multiple currency pairs. The MACD line crossing above or below the signal line generates potential trading signals, while the histogram measures the momentum strength. So this is the MACD we are talking about. Combining both indicators, the real magic happens when both indicators align. So what are we looking for? We are looking for when the parabolic SAR dot positions to confirm the trend direction. Remember, the parabolic, when it's below the price, we are looking for buying opportunities. When it's above price, we are looking for selling opportunities. We are also looking for the MACD crossover to validate entry timing. Then we will look at our histogram on our MACD indicator for momentum to confirm the trend strength. This is how we combine both indicators. This systematic approach helps eliminate false signals and increase your probability of successful trades. The parabolic SAR keep you in the trend while the MACD confirms the momentum. Now let's look at the strategy rules. For long setup, for buying opportunity, you need three key confirmation. You have to first of all confirm that the parabolic SAR dot appears to be below the price. As we can see here, it is below the price, while the MACD line crosses above the signal line. The MACD line is this blue line. Once it crosses above the signal line, which is the yellow line, we are surely in a buying opportunity. While we look at the histogram, the MACD histogram, to see if it has turned to the positive side and it started increasing. Yes, these things have been aligned for a buying trade. While in a short trade, let's look for a selling opportunity. First of all, we find out that we have to check if our parabolic SAR is above the price. Once it's above the price, yes, it means we are in a downtrend. Secondly, we check the MACD line. If it crosses below the signal line, as we can see from this area, the MACD line, which is this blue line, it crosses below the signal line, showing yes, we are meant to look for selling opportunities. The last thing we need to confirm is the histogram, whether the histogram turns to the negative side and if it is increasing, and if it starts decreasing, This shows that yes, the momentum of the sellers are in the market. How do we enter a position? Once we open a position, let's use this buying opportunity since all our confluences have been aligned. Once you enter your position, once we confirm the alignment, we enter our position and we put our stop loss 2 or 3 pips below the last parabolic dot. Look at the last dot at this area, we put 2 or 3 pips below. This is how we will do this. This is how we will take the trade. We put our take profit when we can take profit when the MACD shows early signs of reversal. How do they say early signs of reversal? By when we see another crossover. The moment we notice price, the MACD line wants to cross over the signal line again, we can take our profit at that area. We can also use our trailing stops with our new parabolic SAR dot as the form. We can use trailing stop to manage our trade. There are important things we need to consider while taking trades using this our strategy. The first one is we need to consider avoiding trading during major news events. When there is an economic news or any news event, it can affect this our strategy, so you need to avoid trading during this period. Secondly, we need to trade in direction of the higher time frame. Before we trade, we need to observe what the higher time frame is telling us to do before we enter any position. Thirdly, we need to exit the trade when either indicator shows weakness. Once we see any weakness in any of the indicator, when we see a crossover or when we see the parabolic SAR coming above the line or below the line, we need to exit the trade. This rule forms a complete trading system that helps you maintain discipline and consistency in your trading decision. Alright traders, we have come to the end of this video. If you found this video strategy helpful, hit the like button, subscribe and turn on your notification bell for more trading insight. Thank you for tuning in, and until next time, happy trading.